there are some new mortgage rules that might affect your next purchase. Welcome to Jerome in Real Estate. I'm Jerome, your local realtor here in the Fountain and Colorado Springs area. Today I'm going to go over some of the new mortgage rules that have taken effect since last fall up through the upcoming April 1st. So stay tuned and let's get into it. What I've done is I have shared this article that I ran across. It is from realestatebyboston.com and globe.com. It does cover Fannie Mae and Freddie Mac new mortgage rules, so it should be national, but they are, of course, focusing mainly on the Massachusetts area. However, it should be national policy all around. Okay. So as you can see here, the title is Planning to Buy a Home in the Spring. New mortgage rules may affect your purchase. And I believe that they are correct. Keep in mind that I haven't verified every single thing in this article, but more than likely, they know what they're talking about. So first and foremost, what they've got here are condo loan requirements. So let's find out what some of these changes are. I've highlighted some of the main points so we don't have to go over the entire article. First thing, Fannie Mae and Freddie Mac already require most condo projects to go through a detailed review process that includes a questionnaire provided by the condo association. All right, now let's find out how that's changed. What they're saying is that lenders are now required to perform some additional due diligence when it comes to approving condominium units for conventional loans. And let's see what these new additional due diligence questions are. What are we talking about here? New questions. Condo associations must answer address safety, soundness, structural integrity, and the habitability of condos. I'm assuming that there were already some questions regarding that. I'm going to assume that they just pretty much beefed it up, right? So that's probably going to cause some reaction from the condominium, from the condos. Let's see here. The primary focus is on condos that were built 20 or more years ago that have deferred maintenance, building inspection findings, or jurisdictional findings, and the financial impact of addressing those issues. Okay. So now you can start to get a sense of where this is going, right? Let's see here for this next highlight. Some condo associations may refuse to answer the new questions due to liability concerns. And that's what I was talking about. That's exactly where this is heading, right? The liability concerns, which will make it difficult for lenders to approve the project. So basically what they're talking about here is there's definitely going to be pushback. And yeah, that makes sense. Whenever you have, a new policy or a new regulation that's taken effect, not only does it take time to implement it, but it takes time for the people that it affects, or the organizations it affects, to actually start to comply with it. Okay, so this is what we're going to be running into here, and you need to keep that in mind. Where are we at? This next one, condo loans already cost a little more than loans for other types of housing, and it's possible condo loans will become more expensive if lenders want to recoup the cost of additional documentation. So that is definitely something you want to keep in mind if you have it in your head that you want to buy a condo this year or later. Obviously, this is mostly for, investors out there. These new rules are definitely going to be something you want to think about and talk through. All right, so what's our next change here? Right now, we're talking about high balance loans and vacation home financing. So what's happening? Beginning April 1st, mortgages for high balance loans and for second home or vacation home loans will require an additional fee. All right. And I'll keep on here. So a high balance loan, also known as a super conforming loan, is for an amount between the national baseline loan limit and the maximum loan amount in high cost housing markets. So this table right here, you can go ahead and, disregard that. As I said, this news story basically comes out of Massachusetts. So they're talking about all this is Massachusetts. I did look up El Paso County limits, and we are actually also in the $647,200 limit range. Denver is a little bit higher. They're at 684,250. Okay. So let's go ahead and talk about this fee. The upfront fee is likely to be wrapped into the interest rate on the loan. Although borrowers can pay points, a point is equal to 1% of the loan amount to reduce their rate if they prefer. Okay, that makes sense. If you know anything about points, you know that is correct. For high balance loans, borrowers will pay between 0.25% and 0.75% of the loan amount. For second home loans, borrowers will pay 1.125% to 3.87% of the loan amount. Um, okay, that is definitely interesting to know. Once again, this is for your high balance loan people and then also your investors who are doing like a second home or something like that. I call them investors, even though, we're calling it second home loan here. But really, what do you do with a second home loan? You're buying a second home. You're saying that you're staying there for a certain amount of time, which is like a minimum amount of time that you need to for the year. But for the rest of the time, more than likely, you're renting it out, you're Airbnb it, you're doing whatever you want. And to me, that is an investment home. So, most lenders have already begun to incorporate those fees into their mortgage rate quotes. So that's interesting. You may already have seen this being taken into account if you've contacted a lender about, a high balance or a second home loan. All right, let's move on to the next section here. We are now seeing loosened guidelines for self-employed borrowers. And this is hopefully that's going to be good, right? Because for people like me who are independent contractors, it is always difficult to prove to a lender that you have a stable and steady income. So let's find out what kind of guidelines have been loosened here. Earlier in the pandemic, Fannie Mae and Freddie Mac increased documentation requirements for self-employed borrowers to make sure they had stable income and could afford to repay their mortgage. As of February 2nd, the COVID-related additional paperwork was no longer required. Okay, makes sense. Now, they removed the requirement of the current year to date profit and loss statement. All right, so no more current year to date profit and loss statement. And they also removed the 3 months of bank statements to be analyzed to make sure the gross deposits match the income of the previous year. Okay, so that does make it a little bit easier. Um, let's see here. They don't really go much more into this. 1 or 2 years of tax returns can be used to show income for self-employed borrowers as long as they file their 2020 federal returns. All right. Okay. So it definitely is a little bit easier, but obviously it is still more difficult than, just having a steady paying job. There are just a few more hoops that we still have to go through. But at the very least, this is something good that you can bring up with your lender since it just happened. Hopefully, they're already incorporating this. All right. So this one I found interesting. There are new ways to assess creditworthiness, and this is definitely good for our renters out there that are trying to buy their first home or just trying to get back into the um, into a home. Beginning last fall, Fannie Mae and Freddie Mac introduced new ways for loan applicants to have their on-time rent payments reported as part of their credit review. This is very important because you may not have a very deep credit history. So if you can now use your payments for rent as being part of the analysis on your credit history, that'll be good, especially if you're never missing payments and you're always on time. Now they can use it, right? So let's see what the next one says here. This could enable borrowers without a robust credit history to better qualify for a loan by evaluating the rent payment history as part of the credit profile through their automated underwriting engine. Yeah, that is definitely a good deal. This will help more people be able to qualify for a loan, because it expands the depth that their credit history and credit analysis is going through. All right. Borrowers can provide permission to have their income verified from direct deposits, employer data, and tax return data. Awesome. All right. So that pretty much wraps up the news in this article. The mortgage changes that we were talking about that might affect your next purchase. I hope that's helpful. The rest of this article is gonna be basically tips for home buyers. So I am gonna go over that real quick. All right. Let's see some of these tips that they were talking about. Home buyers need to be prepared for continued competition this spring and summer. Shocker. Yeah, you're not going to get out of this seller's market so easy. All right. You definitely still need to be prepared for a whole lot of competition. Yeah, that's a shocker. Let's see. Buyers without enough available funds to purchase a home can look into alternative programs that assist with down payment and closing costs. They can also ask for gift funds from a family member to help offset the money needed for closing costs. All right. Gift funds, I had already covered in my 10 tips for buying in a seller's market. I'll go ahead and link that video below as well. So that, this is something that I have already been over. And here we have this article basically reinforcing that exact premise, right? All right, what's next here? So, with interest rates rising, discuss various mortgage options with your lender to obtain the lowest payment. Of course, you definitely want to find different options. You want to make sure you get out there and interview different lenders as well. Okay, so you want to shop around, not just shopping around for the lender, but also shopping around for the options that you might be able to use. That's actually a good tip. And let's see what we have here. Home buyers should work closely with their real estate agent and their lender to maximize their buying power and to be ready to move quickly when they find a house that works for them. Absolutely correct. You got to move quick. So, yeah, love these tips right here. So, once again, this article, was from Real Estate by Boston.com and Globe.com. I haven't verified 100% everything that's in here, but since they're stating that it was from Fannie Mae and Freddie Mac, these changes, I'm assuming that it's a national thing. I did look up a few of the things noted in this article, and it did seem to match up. So, all right, appreciate it. Let me go ahead and switch off from this screen. All right, people, that's it for today. As always, thanks for watching. If you did like the content, if you like the tips, the news, the updates, please give me a like, give me a subscribe, and we'll see you next time.